Talk some real estate now. Home builder sentiment rose in April for the fourth consecutive month. The NAHB citing low existing inventory for driving confidence. Joining us now is Jerry Howard, National Association of Home Builders CEO. Jerry, always good to see you. So got the chart behind us of the home builders sentiment, and you see it ticking up quite a bit from the beginning of the year, but we are nowhere near these levels from January 22. Those were in the mid-80s. We're still in negative territory, below 50. What do we need to get back up the mountain?
Well, building costs are still, I think, the strongest wind that's in our face right now. Building costs, because of material costs and labor costs, are really an issue. Also, there's still some unease in the banking community, and that's making it particularly difficult for builders at the front end of the pipeline, where they buy the land. Acquisition, development, and construction is the term of art. An AD&C loan, those are a little bit harder to come by. Mortgage rates are pretty steady, below 7. That's good. Not great, but good. But we still got to get the cost of capital for the builders themselves down. So cost of capital, cost of materials, cost of labor, those are the things that are bothering us right now. Then, of course, you add the regulatory environment. This administration is much more pro-regulation than the previous administration, and that adds to costs as well.
Jerry, Ines here. Talk to us a little bit about the cost of capital, the lending requirements that you were mentioning. I mean, how is this affecting the industry?
Well, I'm starting to hear more and more builders say that their banks, and builders generally get their loans from regional, small, local banks. As a result of the crisis out there in California, that a lot of the banks are being a lot more cautious about lending in general and to builders for acquisition, development, and construction in particular.
Boy, that is really interesting. I have not heard that to this point, Jerry. A lot of people wait for bank CEOs to kind of tell them about the state of the economy. What are your builders telling you that gives you a good sense of where this economy is headed?
Well, you know, we had forecast going back to last winter that by the end of this year, we should be back to a pretty healthy housing economy. And I still think that that's the case. As I travel the country, as I talk to builders all over, the demand is there. The fact that there is so little existing inventory on the market is beneficial. So I think that if we can get some of these costs down a little bit, or at least in control, that we could have a pretty good fourth quarter and going into next year.
And you mentioned the building materials, that those costs are still high. Do you see relief on the horizon anytime soon? What are you forecasting?
We're very concerned about building material costs. The supply chain is still not back to what it was pre-pandemic. It's taking a long time to get things. Some of the geopolitical issues in the world are impacting the supply chain, and even our relationship with Canada and the possibility of getting more consistent supply of lumber from our Canadian neighbors to the north is problematic. So I don't really see a whole lot of relief on that front. So we're going to have to look at it from the regulatory front and the labor front, hopefully.
Of course, underneath all this, Jerry, are mortgage rates, which have been ticking down pretty steadily, but also appear to be leveling out a bit. Where do you think we'll be later this year in terms of the average 30-year fixed? And as long as it's above 6, is it going to be enough to unfreeze this market to get buyers and sellers off the sidelines?
We'd like to get it down below 6, obviously. I'm not overly optimistic that that's going to happen. But on the other hand, I'm not overly pessimistic that it's going to go higher again either. I think you're going to see mortgage rates stay in the mid-6 range.
And are builders offering incentives to buyers?
Builders had been lowering their prices pretty consistently over the fourth quarter of last year and into the first quarter of this year. That trend seems to be slowing down significantly. Other incentives that they were offering were upgrades on specific components of the house. I think that's probably going to stay in place for a while.
And finally, inventory been another major issue underlying everything. 1/3 of inventory new construction compared to a little more than 10% historically. Telling you what, and when does that dynamic change?
Well, that dynamic changes when people start to put their existing homes on the market, whenever that is. Right now, I think a lot of people who potentially would have sold and maybe downsized if you're a baby boomer are deciding to remodel, renovate, and stay in place. That's an issue, and it's only going to exacerbate the fact that we're about 1 million or more housing units short in this country. If we can't build more and they're not going to put more on the market, we're going to still have a bottleneck there.
Very interesting stuff. Jerry Howard, NAHB. Good to see you, sir. Thanks.